The book, Deep Value, explores the investment strategy of value investing, which involves identifying undervalued stocks in the market. It emphasizes the importance of purchasing stocks that are trading at a significant discount to their intrinsic value. The author Tobias Carlisle delves into the concept of deep value. This is where investors focus on companies that are temporarily undervalued due to short-term issues, but have strong long-term potential. Some key ideas from the book include understanding the difference between price and value. The book highlights the distinction between the market price of a stock and its underlying intrinsic value. Value investors seek to capitalize on market mispricings. The role of contrarian investing. Deep value investors often take a contrarian approach to investing, which often has them investing in unpopular or neglected stocks that the market has undervalued. Financial ratios and metrics. The book discusses various financial ratios and metrics used in value investing, such as the price-to-earnings ratio, or PE, the price-to-book ratio, or PB, and free cash flow, or FCF. It also discusses the margin of safety. Investors are encouraged to apply a margin of safety by buying stocks at a price significantly below their calculated intrinsic value to protect against downside risks. Some implementable takeaways from the book are: conduct thorough research on companies by analyzing their financial statements, competitive advantages, and potential for growth. Value investing requires patience and discipline to hold on to undervalued stocks until their true value is recognized by the market. To reduce risk, it's essential to diversify the investment portfolio across various undervalued stocks from different sectors and industries. Topics that can be explored in depth from the book are the historical success of value investing, analyzing the track record of value investing strategies and their performance compared to other investment approaches, case studies, examining real-life examples of successful deep value investments and understanding the factors that contributed to their success, behavioral finance, and investor psychology, exploring how behavioral finance can influence investment decisions and how to overcome them when practicing deep value investing. The bottom line is that Deep Value is one of the best books on stock market investing ever since Graham and Dodd's security analysis. Today's stock market is heavily misshaped by the force-fed capital from retirement plan contributions, overinflating many large-cap companies, thereby leaving the only opportunities for real growth in small and mid-cap companies. Carlisle gives us a new tool to analyze them with: the acquirer's multiple, which is enterprise value divided by earnings before interest and taxes, or better known as EBIT. This is how Carl Icahn and other activist investors find and measure opportunities, because it tells them how many years it will take to make back their money from the acquisition. Carlisle challenges the widely accepted efficient market hypothesis, asserting that markets are not always efficient in pricing stocks correctly. He believes that investors' emotions and behavioral biases lead to mispricings, creating potential profit opportunities for those who can identify them, and he is 100% right. The author introduces the concept of value investing and highlights Joel Greenblatt's magic formula, which ranks stocks on their earnings yield and return on capital. He explains how this formula can be used to identify undervalued stocks that have strong earning potential, but he also highlights that the earnings yield is really the only essential part of the magic formula, because it really doesn't matter if a company is a good company, which is what the return on capital metric tells you. All that really matters is this company being offered at a good price? Because mean reversion will come in and work its magic, whether it's a good company or not. Carlisle emphasizes the significance of contrarian investing, where investors go against the crowd to buy stocks that are out of favor. By doing so, they can acquire shares at a lower price, increasing the potential for substantial gains when market sentiment turns positive. The author provides a detailed framework to identify deep valued stocks, which are those that are substantially undervalued compared to their true worth. He outlines key financial metrics and ratios to analyze companies and determine their intrinsic value. And that critical ratio is the acquirer's multiple, enterprise value over earnings before interest and taxes. In a world dominated by short-term thinking, Carlisle advocates for patience in value investing. He explains how holding on to undervalued stocks for an extended period allows investors to capture their full potential and reap the rewards of their fundamental value. The book also delves into psychological aspects of investing, discussing how to maintain emotional resilience during periods of market turbulence. Carlisle offers practical advice on staying focused, avoiding emotional decision-making, and sticking to one's investment strategy. To foster self-improvement, the book recommends maintaining a journal of investment ideas and tracking their outcomes. This practice enables investors to review their thought processes, refine their methodologies, and enhance their overall performance. In conclusion, Deep Value by Tobias Carlisle offers a comprehensive guide to value investing, debunking the inefficient market hypothesis, and providing practical strategies for identifying undervalued stocks. By implementing the principles outlined in the book, investors can potentially achieve superior long-term returns while managing risk and maintaining emotional resilience. 5 questions for reflection. How can you apply the margin of safety principle to your investment strategy? What are the key financial metrics you should consider when identifying deep value stocks? How can you cultivate patience in your investment approach? Describe a situation in which contrarian investing could prove beneficial. And what risk management strategies resonate with you, and how will you implement them in your portfolio? In today's fast-paced world of investing, very few of us have the time to read the first few chapters of a book and determine if the rest of it is worth a read. Here at Net Worth Rising, we're going to do our part to help you save that time and determine in advance if any of these books on investing are worth your reading time. Subscribe to the channel, and that way you'll be certain you never miss another one of these book reviews and know whether or not the latest investment books are worth your precious time and worth the read.